Markets here, we are mixed, and Nasdaq's off its best level too. And many stocks that were nicely green have peeled back a bit. The Dow's off 0.5%. Josh, we obviously overnight were reacting to the trade court ruling. It's really hard to trade that, though, because it's far, far from the end of it. No one knows what really the next step is going to be, which is why we're going to focus on NVIDIA. It's the biggest story in the market. Moving higher, obviously, after their earnings. It has retaken the spot as the most valuable company in the market. It's up 4%. Your take on the quarter and what to do with the stock now is what?
Look, I think NVIDIA, we talked about this going into the print earlier this week. It's just in this really singular position, and everybody is aware of that. The multiple's not crazy, given how popular the AI theme is and given how badly people want to be allocated to it. So I wouldn't say it's like this outrageous multiple on expectations. There are tons of stocks like that, and this isn't one of them. Obviously, the growth rate is decelerating. It's still incredible. It's still the most important company in the entire AI theme. It probably will be for years and years to come. We all agree with that. But what are you looking for? So they guided to $45 billion in revenue for Q2. The estimate was $45.9 billion. Some of that you can blame the chips not being able to be sold in China. Fine, we all understand that. The analysts have long ago pulled all of that out of their estimates. In the end, if they can hit that number, it's great. It's just not what NVIDIA was doing a year ago, 2 years ago. So I think the stock coming back to this old high, stalling out a little bit, makes sense. I'm along. I'm not going anywhere. Everything that I heard discussed in the Q&A section of the call is exactly what I would have wanted to hear as a continuing long-term shareholder. This company is just absolutely on fire.
The semis trade, which has been on fire in the month of May after sucking wind for a while. It's the best month since May of 23, so 2 years for the SMH. Winners across the board, not just NVIDIA, obviously. Micron's 26, Microchip, which you have the preferreds in. It's Broadcom, which reports next week, reiterated by today, 205 at Deutsche Bank's the price target there, Taiwan Semi, Lam, and AMD.
Right, but I think we need to be careful when saying, hey, this is a great month. I had a client ask me the other day, they said, why is the microchip preferred that you bought from me a month and change ago up 40+%? And I said, because it shouldn't have been down 60%. So there was that really just like air, all the air was sucked out of the room in early April, and it reset those prices. So a lot of these huge upward moves are really not because their stories have changed, I don't think, but just because the share prices a month and change ago were down too much.
That's a good point. The SMH itself, the index, is only 13% off of 52-week highs, but the median stock in the SMH ETF is 36% below its 52-week high. So the benefit of the SMH is that 40% of it is the top three names. It's NVIDIA, it's Taiwan Semi, and it's Broadcom. And the other 60%, they've rallied, obviously, with the overall market. They're nowhere near those old cycle highs. I don't know if they get back, but it's almost not that important to the NASDAQ because they're just not big enough. There's only one stock in the SMH that's below its 50-day moving average. Can you tell me what it is?
Microchip?
Intel.
Oh, Intel. Oh, sorry, I blacked that out.
The entire,
you know that I blacked it out?
Yes. The entire
I don't even
index.
know what you're talking about.
You've never heard of Intel.
Never heard of it.
The entire index, short term, is rallying, but those big three are really the critical names in the space, and they look good.
Yeah. This is a helper, if nothing else, Bryn, to the overall big cap tech trade. You couldn't have NVIDIA do anything to question demand. You would see many of those stocks down today. They're not having the greatest day. However, the NASDAQ has just been a ripper this month, up 10%. The MAG 7 ETF, which is known as the MAGs, best month ever since the inception, as many of those names have just absolutely ripped this month.
Yeah, well, I mean, I think besides, Jenny's very, very accurate point about a mean reversion trade, I think what you're seeing, and I think going back to the call with Jensen, he's like, AI diffusion is off the table. We're not seeing these hallucinations. These AI reasoning models are coming. And so it's like we're getting these very large step functions up versus more linear incremental. And then you heard Microsoft talk about it and Jensen about these tokens. about all these tokens getting used and the cost of the tokens coming down. And so I just think you're really seeing this not only adoption, but I think it's important ultimately this return on equity, which at some point we see the return on equity in NVIDIA, but I think Microsoft talked about it as well. They're doing really well. And so I think these names are tough not to own because of the free cash flow, of the growth, of the opportunities going forward.
Facebook's got a $68 average revenue per user. They are minting it. So when we think about Facebook or Meta and monetizing their AI versus Google, that's like all, to me, that's all whipped cream and cherry on top for Meta. Whereas for Google, it could be a little bit of cannibalization of the other business. So I look at this and I'm like, wow, that's great. AI is just more money, more profitability. Google, I'm not sure it is. It's a tough one. So when Bryn said before you have to own, or I can see owning the Mag 7s, I'm not sure that you really want to own all 7. I think it's still going to be a time where maybe you want to own 3 of them or 5 of them or a few of them, but I'm not sure you want to own all 7.
Or just weight them, underweight significantly and overweight significantly, and you're going to, and if they really perform.
But here's the thing: if you're going to, from a portfolio management perspective, if you're going to underweight something, then why bother owning it?
What would happen to Google's market cap if and when OpenAI files for an IPO? Where is the shareholder base for that stock in the public markets coming from? It's a $300 billion valuation. Those are people selling Alphabet to buy OpenAI, which many perceive to be the next wave of how consumers find what they're looking for on the web. Google's awesome. They have amazing technologies. They have huge investments in things like Waymo. They're going to be big in quantum computing. Nobody is saying that Alphabet is not well positioned for the future, but in this particular business, which accounts for half their revenue, they have never, ever had to fight with one hand tied behind their back the way that they have to fight now. And when I talk to people about ChatGPT, you have people paying $20 a month. They don't even know how to use it.
Right.
You go on someone's phone and say, go in settings, personalization, turn on memory. Why don't you have your memory turned on? You're using it like Google. The thing is not getting to know you. Have you introduced yourself to your ChatGPT yet? Have you literally gone in and said, hi, I'm Scott Wapner. I host a show on CNBC about stocks. And that way the thing knows how to help you. I know that Gemini is not a total also-ran. Yeah. It's just not where it needs to be. And from a monetization standpoint, it's all Wall Street cares about. Wall Street doesn't care about Tom Cruise. Wall Street wants to know, will they ever make as much money in this as they used to make when they had a monopoly in search? Yeah. I think the answer is probably not.
We want to move and talk about cyber, because if you were watching our program yesterday, things did get a little bit spicy here on the halftime report. A debate about Palo Alto Networks. Stephanie Link long the name and has been buying more. Malcolm Etheridge selling it and telling us why.
When you look at a company like Palo Alto, where 50 to 60% of their revenues comes from the federal sector, that's scary to me.
There's no way this administration is cutting anything in cybersecurity.
They were just on Congress defending their stance to cut the budget by $500 billion.
They can't afford to. They can't afford to. There's no way they'll find other places to cut.
I agree with you that they should not, but I believe that they will.
I like that.
All right, well.
I like that.
Well, I don't know what you're going to think about this. Oh. Palo Alto CEO Nikesh Arora, he saw that debate. He responded and refuted Malcolm's key claim in a post last night on LinkedIn, saying, quote, I don't care if people sell our stock, but please ensure your guests know their facts. We are not 50% reliant on the Fed. How's 5%? Have discussed de-risking our Fed business in both earnings calls. We're not only on-prem. We crossed $5 billion in next-generation security, all delivered through the cloud. One of our fastest-growing businesses is Zero Trust. We might know a thing or two. We are platformizing our way not just into customers' hearts, also into their cybersecurity budgets. Our largest deal this quarter was $90 million. Here's the key point to be made, and where I think we had some issues with what Malcolm had to say. 50% of government spending on cyber goes to Palo Alto. 50% of what the government spends on cyber goes to Palo Alto. Not that Palo Alto itself relies on the government for 50 to 60% of its billings. What percentage of Palo Alto's total billings come from government? In Q3, the company reported single digits. And you saw what Nikesh Arora himself said, in his own words, was 5%. Yes, there have been concerns about slowdowns in billings in prior quarters, including from the government, but the numbers were way off. And the facts matter. They matter to you, matter to us, matter to the companies we talk about. I wanted to get that cleared up. All of that, as I go to Bryn to talk about the cyber ETF, we don't have to talk about Palo Alto because you don't own it individually, but you do like these stocks.
Oh yeah, so Steph won on that one, on that little debate. So go Steph. Yeah, I think this is a secular grower, and it's that if you look at areas, you have AI, you have cybersecurity. Where else are you going to get this consistent secular growth rate? Cybersecurity. So I just think this is a global trend. It's not slowing down. And so I like owning the basket of names because like CrowdStrike will do well. Okta had a bad day the other day, but then Palo Alto will run about. So I can own, I feel like, a larger size position because I own the basket. But this is a secular growing trend that's not going away. So I just think buy the basket, let it run in your portfolio, and call it a day.
On my best stocks in the market list, we talked about Zscaler a couple of weeks back. The stock still looks phenomenal. It's hanging high right by 52-week highs right now. And of course, the name that I own that I think is the dominant player in the space for years to come, CrowdStrike, which just made a new record high yesterday and seems to be doing that a lot lately. There's like a lot of different ways to win. I agree with Bryn. I've just chosen to pick the one that I think is going to basically be the biggest name in the space, and not changing that strategy.
Okay. So. Let's talk about, before we take a break, momentum, because the MTUM, I mean, what was it, 6 months ago, maybe even more, we were talking about that as a factor doing so well, and then it had a major rollover. It did hit a record high. And in May, names like AppLovin are up 43%, Constellation 36, Robinhood 31, Carvana 30, Tesla 28, Vertiv 26, Roblox 26. That's a smattering of names from that index.
I mean, this is a stock that is effectively sitting on an 8-year low. It keeps making lower lows, even when they have a quote-unquote better than expected quarter. Like within a week, the stock's down. The superstars that are all aging. LeBron James is in his 40s. Michael Jordan is, 30 years retired. I don't even know what we do with something like Nike here, but like, it's just a perennial falling knife. It's a really tough stock.
Price tells the story here. I mean, the fact that it's coming back down after the earnings report is telling you something.
Yeah, but I mean, what is a price that tells the story today does not a turnaround story tell tomorrow?
What is the turnaround?
I'm just throwing that out there for a point of debate. I don't have facts in my back pocket to say this is what the company is going to do and it's going to work, and they're going to counter the fact that LeBron's soon to be retired and they no longer rep Tiger.
Let me ask you.
Serena's gone and all these other athletes. I get that story, but it's still Nike.
Yes, but they have been getting by with the staples. Bryn, one sec. Like, they have been getting by selling Dunks and Air Force Ones.
Have over Jordan.
And Jordans, and this is the same thing they've been doing. And look, you've got these other brands that have come along. They don't have meaningful market share, but they're forcing Nike to fight defensively in key markets like running.
Right.
And then this thing that they did with Foot Locker and Dick's and all of their retailers, like basically saying, we don't need you. And now coming back to them hat in hand, what did they think would happen? The shelves would have nothing on them?
See,
they've been replaced.
You know what this does? This brings us back to our Google conversation, where Google 2 years and 5 years and 10 years ago had no competition, and now they do. Nike has more competition now than it did 10 years ago and 20 years ago. The competition's changing, and that's why the stock's flat.
Amer Sports is your play here?
Yeah. Yeah, we bought that. I was waiting for a better price, but when it broke out above its February IPO, we bought it last autumn, and really caught the Chinese ramp on it. This thing hasn't looked back. Talk about a company that has a portfolio of brands, Solomon Sports. They have Wilson for paddle sports, Arc'teryx. I mean, the list continues to go on. They've done a lot of those acquired at cheap levels. They had a blowout report last week and raised full-year guidance, raised quarter-2 guidance, and I see a lot of momentum. Maybe it settles in a little bit above here, maybe between here and $30. But this reminds me of the elevation, the hockey stick that Decker's had a couple years ago.
All right, we are back. Josh Brown's best stocks in the market, a new name, and it is. You said it was tasty. Hint, hint. What is it? What is it?
You like Capital Grill, right?
I do.
Yeah, that's low key my jam.
Consistently good.
Yeah, Darden Restaurants. Okay, I've learned a very long time ago that my taste is not necessarily important when it comes to selecting investments and what I think people should do, should buy, should spend time, should spend money on. Doesn't often matter. And Darden is a really great example of that. I don't go to the Olive Garden. I live in Nassau County, Long Island. I live 10 minutes away from Matteo's, Bellanotte, Chris and Tony's.
Right,
I could go to 388. I can go to like the best Italian restaurants anywhere outside of Italy anytime I want. Olive Garden supplies Italian food to people all over the country who don't have those same options, and they're doing a really good job. Darden's biggest chain is Olive Garden. It's about $3.8 billion in revenue. System-wide sales at Darden are $12.1 billion. They also own Capital Grill, Eddie V's, Longhorn Steakhouse is a really big part of the business, Yard House, Ruth's Chris. So they're basically catering to the consumer at every level, every income level. They have, we'll call it a solution. Olive Garden is the biggest part of the company's revenue, and that's where things really matter. Profit margin is increasing. The company has been growing earnings at about 12% a year over the last 5 years. That's why this stock is on the best stocks in the market list. I think it's way less susceptible to the things we worry about. Who's getting hurt? The low-end consumer, the high-end consumer, the middle consumer. They've got offsetting properties in different markets, and they're doing a really good job. So this is a great stock. What I would do here, I would use that $200 level as kind of like a line in the sand if I'm trading this short term. That's where the short-term uptrend breaks down. As an investor, I would say more like 180. The stock had resistance there, then it found support there. That would probably be the level that I would use. So long as this name is above 200, though, I think you can own it. And it acts great. In a difficult market where people are questioning the consumer, this thing is ripping.
Rook,
never-ending.
you're a restaurant guy.
Soup, salad, and breadsticks at Olive Garden.
They're not doing that anymore.
They're not doing that anymore?
I think they still do never-ending pasta, but I think they chilled out with the breadsticks. Well, nobody needs that.
America gravitates towards the all-you-can-eat, the lunch, and the dinner. And I mean, it's not a surprise that they've been able to be a staple. I mean, if you drive through some of these areas, suburban areas, you're going to see it outside Chicago. Olive Garden's there, Longhorn's across the street. Yeah. Going on road trips, they're all over the place, and they're attacking I think strategically placing these in the right spot.
Capital Grill, the Eau Poivre New York strip. Like if you don't know where to go, you're at a shopping mall. There's Capital Grill. Get the strip, or they do a ribeye with like
That's my favorite, the porcini rub.
What is that?
Like a Kona rub, right?
Kona rub.
The Kona rub, that's the one.
Gotta do the ribeye.
Josh, can I finally deliver the line I've been wanting to use?
Go ahead.
Josh isn't just an investor, he's a customer too.
Look at you. Wow, we're gonna have to leave it there.
Wow. Stealing from commercials past. All right. Committee holdings on the move. Bitcoin ETFs pulling in $9 billion as investors ditch their gold holdings. Bryn, you've got Bitcoin ETF. Bill has Bitcoin ETF. Josh has Bitcoin personally, but you get the first crack. Bye-bye gold, hello Bitcoin. Is that where this trade is now?
You know what? At the end of the year when Bitcoin hit 109, it was not able to hold that, and you got right close to it yesterday, and it's not able to hold it. I think you see between like 95, maybe like 103 support here, but I definitely think it could not break through, so you have a double top.
Yeah. I'm a dollar cost average guy on both. It's the only they don't trade on anything other than whatever's happening that day. There's no valuation here. Neither one of these has a cash flow attached to it that you could say it's worth 18 times because blank. So I think the rational way to be in these markets like gold, like Bitcoin, if they're going to be a long-term part of your asset allocation, set the rules in advance. I buy X dollars each month. And no matter what happens, the price gets cut in half, I'm still a buyer. That way I'm rooting for it to come down. The price keeps going up, I keep buying. That's what I've done. That's what I think works. I know it works. And I think it's more rational than making up price targets based on magic and fairies and rainbows.
I think technicals matter here. We own IBIT.
For trading.
For trading, yes. We own IBIT as a diversifier in portfolios, about 75 basis points. But there are days where this diversifier works, not necessarily IBIT. I would not be throwing gold out. Gold looks really constructive. A lot of people were really negative on gold recently, and it held a really great technical pattern. It is capitalizing on days that the stock market's down a bit, but speaking to cash flow, you can build out a real asset bucket in a diversified portfolio. You have something like gold miners, which I think are in a tremendously bull market. They do pay tremendous cash flow. Gold itself, I think, is again a great diversifier. There's ways to place this in the portfolio. The way we look at IBIT, the way we look at miners, the way we look at gold, and being able to diversify, because the traditional 60-40 just isn't there anymore.
Gold's not that far from its all-time high either, with some predictions suggesting 4,000 is the next.
It's in a secular bull market. The big thing is that it's a secular bull market, which means it could go up 50%, like when it's in one of these phases.
I'm calling it a generational bull market. I do run a gold fund. It's a CTA. I mean, we are very bullish on gold, but we do try to monetize some of the larger moves. I think it's in this elongated bull flag pattern. It has an $80 average true range right now. $80. That's crazy. So you have to manage risk in a very volatile market, but I think it's higher to go. It does need some of the other metals to wake up. Copper, silver, platinum starting to really wake up. I think this is just getting started.
Okay.
I find it fascinating that the Fed thinks it can control inflation with overnight rates, as if they ever have been able to produce inflation before, trying as hard as they could for 15 years and not able to. And now they think they can have inflation resume. We're looking at continuous claims continuing to rise in the labor market, and the mother of all disinflationary bombs in the form of AI, literally making it so it's getting harder every month for people who have previously laid off to get a new job. Are we just going to ignore that and think the Fed, by cutting 25 basis points, is going to resume 2021 9% inflation readings? It's never going to happen.
No,
they're not that powerful.
It's not going to happen, but it's not going to hurt.
Housing's 30% of CPI. Have you seen the housing data recently? Case-Shiller, home price index, all coming lower. Housing starts this morning. I mean, that's why it's disinflationary.
So we gotta bounce. Make this quick.
Look at what Best Buy said today. The stock is pancaked right now. They literally have this demand-destroying tariff thing going on. It's not producing inflation, and the Fed won't make inflation worse by cutting rates. It's not how it works anymore. It's a different world. So.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Thursday, May 29th. It's 4:50 p.m. We just saw Josh Brown and other guests on today's episode of the Halftime Report, and they shared a lot of their stock picks and some ideas about where the markets are moving to. And here's what we're going to do. We're going to break down a number of those stocks, in fact, 10 of the stocks that they talked about, including CrowdStrike, Robinhood, Momentum, ETF, Nike, Palantir, Palo Alto. So we're going to look at those. We're going to use the Ichimoku indicator, the Japanese indicator that you see right here. We're going to also cover the indices. We're going to cover the Mag 7 stocks, which is very important. See how those are doing. Technically, we're going to look at the sectors, and we're going to take a look at one of our members' requests, EFA, which is an ETF. So let's first, before we get started, take a look at the markets. And what you'll see is they were all up, but just slightly today, right? You can see in the morning, price got above the closing price right there, dropped during the day. Then we had a little bit of a recovery here. And then finally, the Dow was up just 0.28%. The NASDAQ was up 0.39%. S&P 500 was up 0.4%. And the Russell 2000 was up 0.3%. What led to the move up? I think there was a lot of optimism because of NVIDIA. That was one part. Secondly, I don't know if you guys heard about the in the news, for example, yesterday, there was potential of the tariffs. Let me show you guys. So a federal appeals court allowed President Trump's sweeping tariffs to temporarily stay in effect a day after the U.S. Court of International Trade had blocked their implementation after deeming their method used to enact them unlawful. So right now, that happened yesterday, so the markets were liking it, but then as the news came out, obviously, I guess the markets are just kind of like just flat right now, processing the information. What it means essentially is that Trump's tariff agenda remains intact, if in flux, in the latest twist in the unfolding legal saga, basically. And so, yeah, that's what it looked like for the markets. Let's look at the S&P 500 here. These are the top 500 stocks in the markets. S&P 500, we've got NVIDIA up 3.25% after yesterday's earnings announcement, which was very bullish and very positive. If we look at NVIDIA specifically, let's open that up for a moment. Okay, we can take a look here at the earnings announcement from yesterday, and you can see that. Let me zoom in. I think I can zoom in a little bit. There we go. May 28th, right? You can see the surprise was up 9.89% for the EPS. The EPS gap was up 7.74%, and the revenue was up just 1.68% surprise. So their estimate was 43.334 billion. It ended up being 44.062 billion. Overall, it was bullish for NVIDIA, and you can see it got rewarded, but then it looks like aftermarket right now, NVIDIA is down 0.31%. So it did close up 3.25% for the day, but over here on the right, you'll see that the price after hours is down slightly. So I wouldn't be shocked to see the market also drop a little bit tomorrow, especially after those negative news about the tariffs staying intact, essentially. So let's look at the heat map once again, and you'll see that the majority of the stocks were up. Some of the stocks that didn't do so well, CRM and Uber, they were down. Palantir was down. CrowdStrike was down a little bit. But the majority of the semiconductors were up. You can see the utilities were up today. The healthcare stocks did well. They were in the green. Financials were in the green. Consumer defenses like Walmart and Costco were slightly down. And Netflix was down 1.96%. So, yeah, let's take a look also at the sectors per se. Here we got the strongest sectors for the day were healthcare up 0.9% and real estate up 0.9%. And the communication services sector was down 0.48%. So this article also came out just this afternoon after the close of the day. It's at 4:34 p.m. as you can see there. And Dell's earnings outlook blows past expectations, and this number explains why. Basically, Dell stock is rising after the company announced a $14 billion plus AI backlog. The company now plans to ship $7 billion worth of AI servers this quarter. So that's good. We're going to look at that stock. So definitely let's, why don't we actually get started on that actually right now? We'll take a look at the indices, and then we'll take a look at those stocks. I've got Dell in that list there as well. So we want to see how they're doing, especially after hours. Actually, did I add it in there? Let's make sure we get it in there. DEL. There we go. L. That's right. Okay. So first, let's look at the Dow Jones. Where is it at? Still stuck in between the Tenkan-sen, the 9 period right here, the green line, and the 200-day moving average is that dotted yellow line that you see right there. Okay. So we're basically in a consolidation stage right now. Still, there's not a whole lot happening. It was only up 0.25%, like I said. Nothing major going on here. We're looking at a daily chart. FEZ popped right back above the Tenkan-sen, the 9 period again. Today it was under yesterday briefly, and so that's still looking pretty bullish. In fact, out of the all the ETFs here, the Euro Stocks 50 ETF was the strongest, up 0.46%. You got Russell 2000 here, kind of stuck in a consolidation zone as well, staying under that 209.27 level based on that prior high right there. Let's see, what is that price? The high, yeah, it's basically around March 25th or so, somewhere around that level. The Qs, QQQ ETF, still moving up 0.20%, coming close to its resistance prior highs here. How far is it? It's maybe about another 4%. Okay, so we're getting closer and closer, and still holding up above Tenkan-sen, Kijun-sen on the daily chart. What about S&P 500? Same thing. It's just kind of stuck, right? There's not a whole lot of movement in the markets these last couple of weeks. As you can see, it's been stuck in this little range. So the S&P 500 was up 0.39%. Nothing major happening there either. The VIX is under the moving averages and under the 200-day. That's good. We want to see that dropping. Represents the fear in the markets. We want to see that always dropping, or at least staying at these levels. Under 20 is generally a pretty good place to be. All right, so let's take a look at some of the stocks that we have here from CNBC today. These are the stocks that Josh Brown and the guests on the show talked about. So we'll look at these, and we'll start off with AS. So that was Amer Sports Inc. It's in the leisure consumer cyclical. Let's start off with a weekly chart here. Pretty strong. I like what I'm seeing. The only problem is it's a little bit extended, and it looks like we're starting to develop a reversal candle. This is called a spinning top. And when you see something like that at the top of a move, right? I'll show you guys what that looks like. It's like on this side over here, bearish single candle patterns. It's when you have a small little body like this, and you have a wick on the top that's about equal in length to the wick on the bottom. And it looks like a spinning top. When you see something like that at the top of a move, that can signify a slowing down of the momentum, number one. There's not enough buying happening here this week, for example, quite yet. I mean, it's Thursday already. There's only one more day left, right? Friday. And today it was down 2.33. So let's look at the daily chart. You can see it's been stagnant right here. But in the daily chart, it's still in a technical uptrend. We've got all of the elements of the Ichimoku indicator telling us this is still a strong trend. We've got the Senkou Span A above the Senkou Span B. We've got the Tenkan-sen, the 9 period above the 26 period, the red line there. And we have the Chikou Span. Now the Chikou Span is the closing price projected 26 periods into the past. It's a white line right there. If that white line is above the candle below it, that's bullish. If it's under the candles, that's bearish. So that all started becoming bearish right about here back on April 3rd. And you can see if we project 26 periods into the future, which would be this candle right here, it was also popping above the Ichimoku cloud. And you can see that price since that point has moved up 22.36%. So this is why I like using the Ichimoku, because it can keep you out of taking trades before you've got some confirmations. In fact, if you look closely, you'll also notice that we also took out this prior high right there around that same time, right? So that's also very bullish, and it just has continued to move up. So I like this one. This one looks pretty good. How about BBY? Let's look at this on the weekly chart first. This is Best Buy. As you can see, it was down 7.27% today, and look, it's not a very pretty sight. This is the opposite of what you want to see on an Ichimoku chart, folks, okay? What you don't want to see is the Senkou Span A under the Senkou Span B, the purple line. You don't want to see the 9 period under the red line. You don't want to see the white line under price. Certainly don't want to see price under the 200-day moving average. You're in a decline at this point, right? You're in weakness territory. And sometimes these declines can last for a long period of time. It's impossible to determine when this thing is going to end. But right now it's looking like it's turning over again for another leg down. So I'd hold off on Best Buy. There it is. You can see that it actually broke through this little trend line right here. It had this little up move on the daily chart, right? And it broke through right there, came down, moved up a little bit, and then dropped some more. And here it is, much higher volume down below. You can see that in the volume bar. That's okay. 11.7 million shares traded. So that's not good. And then another thing that I like to use is the directional movement index here that you see down below. If you see that the negative DI line, the red line, is above the positive DI line, that's negative. And if you see that the ADX, which is the white line, is moving up while the red line is above the green line, that's telling us the momentum is increasing to the downside. And you can see that because it gapped down, right? 7.27%. This is what it looks like on a 2-hour time frame if you look at it. It's not a pretty sight. So even on the 2-hour where it had that nice little pop up above the 200-day, it was very short-lived. All right. So I'd stay out of that one. What about CrowdStrike? Well, let's start off with the weekly chart. So in the weekly chart, it does happen to be one of the stocks that I have in my portfolio. I don't mind sharing this particular one. You can see here on the daily chart, I'm still holding this position right now. I added this on May 22nd, and yeah, it's just moving up. I'm not going to go into in-depth analysis. I usually do the in-depth analysis on the members-only stocks with members. So you might want to consider becoming a member real quick. Let me tell you how you can become a member so you can access these videos here where I go over my entire portfolio. Every weekend I go into like, I think it's like over 20 stocks that I recommend, and there's over 20 stocks in the portfolio, so you can certainly get some great ideas for upcoming week. I'll be doing another one this Saturday over the weekend, so look out for that one. So there's one from this last week. Here's the one from the week before. You can see how I've been doing. This last week was all profitable. All the trades were profitable. Luckily, the ones that I closed out of. So it was a very positive and bullish week for me. And actually, like, it's been bullish. I've had a few losing trades throughout, but overall, over the last 4 or 5 weeks now, it's been very positive and have come out ahead basically. And I share all the trades. How do you access it? Click the join button right here. You'll see Blue Cloud Supporter, Blue Cloud Trader. Now this under this level here is where you'll be able to access those exclusive member only videos. And then if you want to get the daily updates as well, you'll get those exclusive under become a Blue Cloud Legend level member. You'll get, in addition to day trading videos and that exclusive member only videos, you'll also get the daily trade updates. And once you join, there'll be a new little tab that pops up here at the bottom, and it will look like this. It will show membership, and you click on that, and that's where you'll find the trades that I've placed and posts. All right, let's get back. So CrowdStrike, I'm still holding, obviously. It was down 2.14% though. Dell. Now Dell came out with their earnings today after hours. All right, so this is where it was at during the closing time, down 0.12% at 4 p.m. I'm going to click a little button up at the top here that you can't see that is going to show us post-market. And you can see it's up 2.66% after hours. I can switch it from daily time frame to 5 minutes so we can see how it looks. This is what it looks like after 4 p.m. right here. Popped up. Okay, it's moving sideways, dropped a little bit. But it's still up 2.66%. This is called TC2000, the software that I'm using. You can also access this by clicking here. 9 more links on my page. Scroll down. There's the link. $25 coupon for the software, TC2000. All right, let's get back. So let me take that off for a moment and just go back to regular closing prices. And, yeah, it was stalling here. That's a 5 minute. Sorry, let me switch it back to the daily time frame. So it was stuck in this little consolidation stage, right? Waiting for the May 29th earnings announcement that happened after hours, and you can see the change here. And so I think that it has potential now to continue moving up. I don't like the fact that it's developing this kind of spinning top after hours, because the price moved all the way up to what was that high there? 126, and then immediately started dropping, right? So here's a 3 minute. You can see that big spike, and it's still dropping. So, tomorrow morning we'll have a better sense about where this is going to be. All right, let's take a look at the next stock, DRI. That's Darden Restaurants. Josh Brown likes this one. I like this stock too. I've had this in the portfolio in the past. Weekly chart looks very strong. Here it is on the daily time frame as well. It's breaking through some levels right now. I like what I'm seeing here. It actually broke above this level of resistance right here. Okay, you can see that happened right there this week on, what day was that? It was on Tuesday. There's Wednesday and there's Thursday, okay? So it's still moving up 0.98%. Here's Robinhood. Let's look at that one. Daily chart. So I had a position in this one too in the past. Now I got out back here. It moved up a little bit more. It dropped. It was under the cloud. It was under the moving averages for a while. It got above the cloud here. This would have been a good place to add a position. You would have had a nice 16.8% move if you added the position right there. I didn't have a position in Robinhood at that point, but it's now come back here's the deal. It's come back to a prior high, the 66.91. And what's happening? If you look closely, right, it just keeps on hitting that level, and it just can't seem to get through it. Imagine this is ice right here. This is like ice, and there's a person under here, and he's trying to break through to get some oxygen so that he can continue, so he can live, right, and continue moving on. If the candles here are unsuccessful in breaking through that 66.91 level, okay, expect a decline. I don't know how far down it's going to drop. Maybe it will drop down to the Kijinsen level, and if it does, which is the next level of support, that's about a 13.9% drop from where we currently are. But right now, it's still a hold position. It's still holding up above Tenkan-sen. It could, tomorrow or maybe next week pop through this level. The next earnings are on August 6th, so they're a little far ahead. But I wouldn't be buying here. I wouldn't be adding a new position. If you happen to be holding it, okay, I'd say you can certainly hold it for a little bit longer and see if it can break through that level, because right now it's just in a standstill, essentially. MTUM is the next one we're going to look at. This one, on the other hand, as you can see, has popped through that prior high, right? So this is post-market, by the way. Let me show you what it looks like at the close. It was down. It was up just 0.09% after hours. Okay, a nice pop up for the momentum ETF MTUM. So that looks pretty good to me. I like it. That's what it looks like on the daily. Here's the weekly chart, also looking pretty good. What about Nike? Let's take a look at Nike. Here it is in the weekly chart. Now, Bryn bought Nike back in April, on April 4th. I have a note here because I usually keep some notes when these guests on Halftime Report buy the stock, so we can keep a track of the stocks that they have in their portfolios. Now, I think she sold it. I think in this episode she mentioned something about that. So let's look at April 4th specifically. So she was buying it back here on this candle right here. I'm going to show you. I'm going to just circle it. That right there. Right? Sorry, that's a weekly chart. Let me go to the daily. April 4th was right here on this candle right here. And that's not a bad place to buy, I suppose, if you are using technical analysis and you're using a bullish engulfing pattern type, and you're just using that. Now I'm using the Ichimoku. Under the Ichimoku rules, you don't want to be adding positions when price, okay, is under the cloud, all right, and under the moving averages. In this case, it worked out pretty well because it did move up a bit, right? It's moved up, but I don't understand why she sold it here. Like it's moved up since that point. It's moved up 7.22%. Right now, it's actually entered the Ichimoku cloud. It's actually starting to show more strength. We also had a positive crossover. The 9 period crossed above the Kijinsen, right? So it was starting to show strength. And like at a minimum, when you buy a stock, like say that you buy a stock here on April 4th, you can see that it didn't even break through that daily low at any point here. It just kind of like held its ground. So I'm not exactly sure why she sold the position, but let's look at this after hours. See what it looks like post-market. It was down just 0.45%. So anyway, this is the weekly chart. Now the weekly chart, of course, it's very bearish, right? So I personally wouldn't have even added a position here based on the weekly. I don't add positions when stocks are under the weekly chart. And on the daily chart, on the daily chart, it's doing pretty well. Like I said, on the 2-hour time frame, you can see it's had that run, right, since April. This area, it's had that little run. It's even above the 200-day moving average, but that slope of the 200 is down. It's a down slope. So we'll see what happens with this stock. But yeah, they were really saying some negative things about it. But I'm seeing strength here right now, at least since April. Since April, it's moved up. I mean, from this low right here, it's moved up 16.14%. So I don't understand why they're kind of giving it such a negative review, especially since in the last few months now it's done okay. PANW, Palo Alto Networks. Let's look at this on the weekly chart. You can see it's above the Ichimoku. That's good. But the Tenkan-sen, the faster moving average, is still under the slower one. And the Senko Span A is under Senko Span B. We also, if you look closely, folks, we also have a lower high. Whoops, right there. A lower high there from the prior high. It almost looks like a double top. Happened right there. Price dropped. It dropped under the low of that top double top pattern. We've talked about that before. That's a bearish situation. This is what it looks like. Double top pattern. Moves up, reaches that level, drops. There's level 2. Comes to that same level again. There's 3. And if it breaks through 4, this level, this prior low, that tends to be bearish. The opposite is a double bottom, which is bullish. So that's what we have here. We've got that double top. So here's the move up to that point, there, and it dropped right through that level. So now we're in a downward trend, downward channel. And so I would not be jumping in here on this stock at this time, based on what I'm seeing on the weekly. On the daily chart, a little bit more bullish, but it also broke through a trend line. I can see that right there. You can see that trend line that was broken. Happened right there. So not the time to be going long here. Also, the directional movement index, if you look down below, the negative DI is above the positive DI, and that's not good either. What about Palantir? Here's a stock that I've had positions in quite a few times. Like, you know, back here, for example, I had a trade back on November 5th to December 9th that I shared with members. It was a 58.7% return on that one. Then there was a 19.7% return, very quick returns too. These were not, it wasn't like extended. These are, you know, relatively short trades. And here's another one from April 24th to May 5th when I got out. Now I haven't added a position since then. You could argue that we had a buy signal right here on this candle. But the thing is, whenever I see like a breakout, a candle that breaks above a prior level of resistance, right? If I see a wick forming at the top, that tells me there was some selling that took place there towards the end of the day in the afternoon. Therefore, it's not as strong of a break, and so that's I'm more skeptical. And then if you start getting all these reversal candles, you're not going to get any more optimistic, right? So like if things can switch around and turn around here for Palantir, let's look at after hours. Oh, actually, this is after hours, down 1.12%. What did it look like at the close? It was down 1.16, not that much more. All right, and ZS is another one, Zscaler. So this one, all right, is, check it out. I mean, this is interesting. Let me throw the weekly chart so you can see what I'm talking about here. Right there, back in 2024, this date, what is it? February 9th, 2024. We reached that level, dropped, stayed under these levels here for a while. Popped above the cloud, came right back, and look what we're forming here towards the end of the week. This is a weekly chart. It reached that 259.61 level, down 1% today. Here's the daily chart. That's not a pretty thing here. I mean, it's a pretty move up from the point where it got above the cloud right there, for example. It moved up 23.95%. So that would have been good, but is this the time to be adding? Absolutely not. Not from a technical perspective. If you look at the ADX here, that represents momentum, the white line. Notice how it's declining right now. That means that momentum is coming out. All right, price is declining. The positive DI is dropping. The negative DI is moving up. That's not good. Volume is increasing, which tells me that profit taking is taking place right here. People who were in this trade are starting to take profits. In fact, you can see it on the daily chart with that little spinning top, right? It touched that price and then started to drop. So that's why I'd hold off on ZS. If it can break through that 259.61 level again, and like it had, you know, it was above, you know, all-time highs look like around $370 something on ZS. We're at 251, so it can certainly go back up to that level, but right now is not the time. All right, next, let's take a look at the Mag 7. Microsoft, here it is, just stagnant in between the two moving averages, nothing to do. It's a hold position. NVIDIA popped, but as you can see, it dropped. And if we click on that post-market, it dropped some more. All right, so only up 2.8% for the day versus 3.25 after hours, that is. So this is what's going on after hours with NVIDIA. Let's throw on the post-market. This is the grayed area here is the post-market. This is what's happening after 4 p.m. So you can see it's just continuing to drop. After it was actually dropping all day. It reached that high up there of around 143.50 or so, and then just continued to drop. Profit taking, a lot of profit taking up there. So I'm not sure if there's going to be a continuation here tomorrow for NVIDIA popping and moving up more, to be honest with you. All right, let's take a look next at Google. And Google is still inside the cloud. And one of the rules of Ichimoku, you don't want to be, oh, sorry, that's a 5 minute. Let's go back to the daily. Sorry about that. We are above the Ichimoku cloud on the daily chart. Holding up above the 200, but I don't like these reversal type candles. All right, it's kind of stalling. Maybe it makes a little bit of sense to wait for it to break above that prior high. Just saying, you know. Tesla, moving up 0.43%. Not a company that I'm interested in adding positions in. I've had positions in the past, but I just don't see why the stock is moving up right now at this point. Like, there's a lot of issues with the company itself, as far as I'm concerned. In Europe, there's no sales. Yeah, it's not a good place for Tesla right now. But maybe things will change. Who knows? Tesla's up 0.43%. Let's look at this post-market. Only up 0.05. So it dropped a little bit after hours. Okay, let's go to Amazon. Amazon is kind of stagnant right here too. Nothing happening here. But it's above the moving averages on the daily chart. On the weekly chart, not all of the elements are in effect. I can see that the single span A is under single span B, so that's not good. But it is above the moving averages and the cloud. So maybe we'll see something happening. Chiku span is kind of stuck right there. It's not above the candle. What about Apple? On the weekly chart, it's under the cloud still. And here it is on the daily chart inside. So it's not bullish at all. Meta looks strong today, up 0.23%. It closed up above the Tenkan-sen and Kijun-sen and above the cloud. It's above the cloud right now on the daily, but on the weekly, it's not bad, not terrible, but the single span A is under single span B. The faster moving average is under the slower one. We did break through these lows over here. You can see that we have a lower low. And if price starts to drop here, that could be really dangerous for Meta, if it happens. Because then we'll have a lower high here from the prior high. And essentially we'll be developing almost like a downward channel. But it hasn't happened yet. So let's hope that it can continue to move up. All right. And for the sectors, I'm only going to cover a few of them, guys. I'm going to cover the following sectors. GDX is still holding up on the weekly chart. You can see it's above the moving averages right now. The Tenkan-sen is crossing over the Kijun-sen. This is very bullish for gold miners. GDX is looking good. Industrials is looking pretty good on the daily chart. And on the weekly, looks good. I mean, the cloud itself is kind of flat right there, but I like the daily chart. It looks good. Bitcoin. Let's look at this. I have some. There we go. So Bryn Talkington on the show, she mentioned Bitcoin is experiencing a double top. It already had experienced a double top. That happened a while ago, actually. Let's look at the weekly chart. I'll show you what I'm talking about. It moved up to this point right here, dropped, came back, and developed a double top, and then it dropped some more. Now, if you're looking at a weekly chart, this would be a triple top, okay? So if you look closely, there's the top, first top, second top, and this, if you want to call it a top, the thing is, it's broken through the double top right here on the daily chart. So and it happened actually on, let's see, it happened with a nice candle right there. But since it broke that level and got up to the highs there of 111,000, whatever that dollar amount was, it's dropped down to 106,259. And currently it's under the Tengen-sen. So I wouldn't recommend adding any new positions to Bitcoin here. This is not a buy signal or buy point. It's showing a little bit of weakness these last, I don't know, what is that? 1, 2, 3, 4, 5, 6, 7, 8 days or so. 7 days, sorry. So for the last 7 days, it's been dropping. Okay. So be cautious with Bitcoin at this point. Maybe you take some profits. Maybe you just hold off until we get a new buy signal. If it can break back above that 109,000, I think then we'll see a continuation to the upside for Bitcoin. XLC is communication services. This one's stalling at 121. Doesn't look terrible, but it's under the Tengen-sen right now. Got under just barely. And then IBIT, that's the Bitcoin ETF. This one is similarly to the Bitcoin versus US dollar, dropping under the Tengen-sen, looking a little weak here. Okay, but overall, is the trend still intact? Yes, 100%. Right, so we still have higher highs, higher lows than the daily. And on the weekly chart, we did break through that prior high there. We've developed a higher high. So as far as I'm concerned, there's certainly a chance that here that Bitcoin, maybe in the near term, it's going to drop a little bit. Because here's a weekly chart. And what this is called here, this is a bearish pattern that I'm seeing on the weekly. Let me show you what I mean. Right there, those two candles. Let's take a look at that for a moment. I'm going to show you what I'm talking about. It's a double candle pattern called dark cloud cover. All right, so basically it looks a little bit like this. You see the price moving up, you get that bullish candle that you see right there, and then a negative one gaps up, right? So price gaps up, but then throughout that whole day or week or whatever it is the candle that you're looking at, it drops, and closes within the body of the prior bullish candle. That's exactly what we have. You can see that. So it gapped up from the opening price, it got up to that point, and then dropped into and then closed within the body of the prior candle. My expectation is that Bitcoin might just pull back a little bit and take a breather. And where might it find support? Right there at the Tengen-sen and Kijun-sen. You could see a 12% drop, potentially, to find that next level of support. All right. So that's what I'd be, thinking it might happen. Now the directional movement is still very bullish, though. So that we're getting conflicting information on the weekly, on the daily chart. You can see that the momentum is declining on the daily chart. All right, let's look at utilities on the daily chart. Still stuck in between the Tengen-sen and Kijun-sen, nothing to do right here. But overall, it seems to be just kind of like in a consolidation zone right now. All right, and on the weekly chart, we are above the cloud, but we're stalling at that 83.41 level. And then finally, GLD here on the weekly chart, you can see there's a downward channel that's building, but what I call this also, this is more of a bullish flag. Okay, so let me show you on the daily chart. After a move up, sometimes price will start to develop lower highs and lower lows like this, and that pattern I can show you pops up. Let me show it right here. Let's see if we can find it right there. This is a continuation. So like I said earlier, price will move up, it will drop, create a lower high here, drop, make a lower low, and then if it breaks through that trend line, then you see the continuation to the upside. All right, so that is what I think is happening here with gold, because gold is still very it's still being bought up quite a bit. And you saw how the GDX is doing. GDX miners tends to be a little bit more of a forward type of potential. It's giving you a hint, it's like the canary in the gold mine. It's telling, hey, no pun intended, right? The canary in the gold mine. It's telling us now that once it broke through that trend line there, there's a potential here for this thing to continue moving up, okay? All right, and then finally, guys, one of our members requested EFA, and so let's look at this one. Now, if you're unfamiliar with it, EAFE. It basically seeks to track the investment results, okay, of large and mid-cap developed market equities, excluding the U.S. and Canada, so outside of the United States and Canada. The fund generally will invest at least 80% of its assets in component securities of its underlying index and in investments that have economic characteristics that are substantially identical to the component securities of its underlying index. So let's look and see how this has done for the year so far. We're going to look at here in FinViz for a moment. You can see performance year to date, it's up 17.29%. Right there. Performance for the year is up 9.4%. And there it is. The majority of the stocks within this is 20 finance, then healthcare, technology, consumer non-durables. And here's some of the top holdings that you see right there. Some big names. So yeah, let's look at the technicals now on EFA. All right. Yeah. So basically, how's it looking on the weekly chart? It's and by the way, this was also Shannon's final trade back on April 15th. She mentioned that she liked that stock or ETF. It's moving. It's moving up pretty well. I'm curious to see how much it's moved since it broke through the Ichimoku cloud right there. It's moved up 9.3% on the weekly chart. So the beta is pretty low, 0.82%. You're not going to have big drops necessarily in this because of the lower beta. But right now it is forming a reversal candle. So how do you deal with a reversal candle on a weekly? If you're someone that's trading this more and you're making your decisions based on the weekly charts, I'd be watching this because it is developing a reversal candle. It doesn't necessarily mean that this is going to materialize into a decline because we had a reversal candle right here, right? And you'll notice that even though price was quite a distance from the Tenkan, right, it never took out the low. So you can see right there, the very next week, price came back to that same level and then continued on, right? So right now, my expectation is like, okay, what I'd be watching next week is to see, all right, is price going to, at a minimum, hold above the low of that week, right? If it starts declining, that's when you might want to consider reducing your position potentially. Here's a daily chart. It is still very strong on the daily. I mean, price has been holding quite well above the Tenkan, as you can see, right? And so it's like a support level, very important, the 9-period for the Ichimoku. Now, if it breaks through that level, where is it most likely to drop? Down to the Kijinsen. So it could be, you could see a potential drop of about 3% if it breaks under a little bit. And that's where you might find some support again. Because typically, whenever you see a break, like right over here, for example, is a perfect example. Price dropped, never broke through the Kijinsen, continued on. Here it broke through the Tenkan, found support at the red line, the Kijinsen. In this case, it closed under right there briefly, and then it closed again under right there, and it led to that big drop. So the Kijinsen is also a really good place to help you monitor. You know, if you want to give it some space to like run, understanding that it's sometimes going to pull back a little bit, the Kijinsen is not a bad place to, or a bad spot to like use as a secondary support level, because if it drops through there, it's most likely to come to the next level, which will be either the 200 or the cloud itself. And that could be a much bigger drop, right? So like to that point right there, it's another, could be an 8% drop or so. So that's what I have for you on this one. Hope you guys enjoyed the video. Thanks for watching. Don't forget to like and subscribe. It really does help the channel. And I will catch you guys in the next one.